T. Most traders lose money in Forex. Not because Forex is difficult, but because they trade without a strategy. They see chaos. We see opportunity. Technical analysis is power, but only when you know how to use it. This isn't about guessing. It's about precision. Smart money concepts. Risk management. Timing. This is how the 1% trade. We're talking about real ways to make real income. Scalping, swing trades, automated strategies, all with controlled risk. It's time to learn the strategies the pros will never share with you. Ready to transform your trading? Join the Global Forex Academy, the virtual university of Forex. Master Technical Analysis. Master Forex. For free. Hey traders. Today I'm teaching 12 advanced Forex patterns that most traders have never even heard of. And don't worry, I promise not to steal your snacks. These patterns can help you see the market in a whole new way, separating the amateurs from the pros. So, grab your your notepad, and let's dive into the charts. First up, the inverse Quasimodo, or IQM. This beauty forms in a downtrend. Liquidity grab, then a breaker structure creating a higher high. The magic happens when price returns to the origin order block. Pros see this as a potential reversal. Amateurs, they're still trying to sell. The biggest mistake is entering too early. Wait for that return to the origin. 2. This pattern is like a bamboo shoot that grows down before it shoots up. It's nature's little trick. Next, the order block flipped with a retest. This is a true power shift. Imagine a bullish order block that fails and becomes bearish. That's the flip, but it's only valid after a structure break. Pros wait for the price to retest the newly flipped block for confirmation. But the rookie mistake is trading the flip without that crucial retest. It's like trying to eat honey without checking for bees first. Always wait for the coast to be clear. Number 3 is the breaker block. It's an order block that failed to hold, got smashed through, and then flipped. After a structural break, price often returns to this breaker for a high probability entry. Debt. The invalidation is clear. If price goes back through the other side of the breaker, the idea is wrong. It's like a bamboo stick that breaks. You can't trust it to hold your weight anymore, but you can use the broken piece to poke your friend. Educationally, of course. Pattern 4. The liquidity raid and reversal. Price aggressively sweeps a clear high or low where everyone has their stop losses. It looks like a massive breakout, but then, boom! It fails to hold and reverses at lightning speed. This signals a sharp short-term shift. The common mistake is chasing that initial breakout. Pros wait for the reversal confirmation. It's a classic trap, leaving a pile of delicious bamboo shoots out in the open. You just know something's up. Moving on to a Wyckoff classic, the Re-Accumulation triangle. You'll find this within a strong uptrend. Price compresses into a triangle shape, building energy, VO. The key is to look for a spring, a fake breakdown below the triangle before the real move up continues. Amateurs by the first breakout attempt. Pros wait for the spring to shake everyone out. It's the market's way of bouncing on a trampoline before launching to the moon. On the bearish side, we have the Wyckoff redistribution channel. This is a bearish continuation pattern that masquerades as a simple range. Price will form a higher high, known as an upthrust or UTAD, just above the channel 2 trap buyers before the real drop begins. The invalidation is a clean break and hold above the channel's top. It's like a panda pretending to climb a tree, only to slide down and steal the picnic basket. Sneaky, sir. Number 7 is the fake flag continuation trap. You see a perfect, textbook bull or bear flag. It looks amazing. Then, it breaks out in the wrong direction, trapping all the hopeful breakout traders. After that fake out, it reverses and continues in the original trend direction. Day. The mistake is obvious. Trading that first tempting breakout. This pattern is the market's practical joke. Don't be the punchline. Let's look at the M-shaped compression pattern. This usually happens on lower time frames. Price forms a tight, compressed M shape, slowly grabbing liquidity on both sides. Then, it reverses sharply. A safe sell entry comes after the base of the M is broken with confirmation. Trading inside the choppy compression is a recipe for disaster. It's like being stuck between two pandas fighting over the last piece of bamboo. Just stay out of it. Pattern 9 is the ascending acceleration channel. This is a rising channel where each bullish wave gets longer and faster. The trend is clearly strong, but this acceleration signals it's nearing exhaustion. The biggest mistake is buying that final super steep acceleration wave right at the top. It's like a rocket running out of fuel. It looks impressive just before it falls back to earth. Next, the descending expansion spiral. This is a fascinating structure. You see a downward spiral where the lows get deeper and the highs get weaker with each rotation. It shows intense, increasing selling pressure. A good sell entry can be found after a spike up to the spiral S resistance is rejected. It's like watching water go down a drain, gaining speed as it nears the center. Don't try to swim against that current. 11 is the swing failure trap, or SFT. Price pushes to a previous swing, high or low. Pokes just above or below it with a wick, but fails to close beyond that level. This signals a lack of strength to continue the move. The amateur trader sees the wick poke out and jumps in on a breakout. The pro sees the failure to close and prepares for a reversal. It's the market knocking on the door, but then running away. Finally, the impulse correction mirror pattern. This one is all about symmetry. A corrective leg of a trend often mirrors the previous impulse leg in terms of time and structure. If the impulse was fast and sharp, the correction might be too. If the impulse was slow and grindy, expect the same from the correction. Misreading the internal waves is the main mistake here. It's like a dance. If you know the steps, you can anticipate the next move. And that's a wrap on 12 advanced patterns. I bet you learned something the majority of traders will never see. If you learned something new, subscribe to Global Forex Academy. Let's trade smart, not like confused squirrels. Thanks for watching.